please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Moving on, we have two more guests who join in. Mr. SP Tulsian of sptulsian.com is with us, and in a bit we'll get Mr. R. Srishankar as well to join us on the show. Mr. Tulsian, good afternoon. Mr. Tulsian, of course, is joining us after a brief break, so it's good to have you back on our channel and on the show. I wanted to start by asking you about the aviation stocks, because there's been a huge surge now after, the way crude prices fell, but it's been really volatile the last few weeks for aviation. How would you approach these names now?
Thanks, Sonia. I think there are a combination of two factors. First, if I go by the numbers or maybe the individual events which have happened, take the case of all three stocks. In Indigo, we have seen the CEO resigning. That had its impact on the share price, and obviously the results were really quite bad. Come on Jet, similar situation, that the Q4 numbers have really been very bad because of the fuel price hike and because of the aircraft lease rentals and one-time maintenance expenses also. A similar situation was faced and seen in case of SpiceJet also. But if you really take the situation from mid of May, when the market have really started falling largely because of the crude rising to $80 per barrel on the Brent, that has been the main culprit. And I think that with the negatives seen behind for all three aviation stocks, in the form of the bad Q4 numbers, now people have all been, accepting that this first quarter is seen to be the best quarter for the aviation stocks, and they are going to have the advantage of that because of the lag effect of the passing of the crude also, which has happened to a great extent. If you take a lag effect of about 30 days and all that, with the smartness of the aviation companies, seen passing that. So taking all this into consideration, with the softening of the crude prices by about 5-6% to $75-76 is seen to be a big positive, because you are entering now in all three stocks at the lowest point of the day, lowest point of maybe this period, and that has been seen quite positive. And I think that if this crude softness continues, which is likely, that will be seen positive, quite positive for all three aviation stocks, though SpiceJet is all hit on the upper circuit, so there is no point in taking call. But on other two stocks, Jet and Indigo, still the positive bias remains intact.
Mr. Sin, hi, good afternoon. Your sense on some of these housing finance names which are seeing a big rally? Indiabulls Housing started the rally yesterday. Can Fin Homes, as we speak, is up 10%. You think the short covering bounce can continue, Mr. Tulsian?
See, Anuj, I think apart from short covering bounce, this is all with to do with the fundamental call also, and in fact you can replicate the same story what we have seen in case of aviation stocks. I'm not saying that here the crude is playing the spoil sport. In fact, if you take the case of housing finance companies, in spite of having very good numbers, Indiabulls Housing Finance having reported a growth of about 34-35% in the bottom line, having given the guidance of 30% growth for FY19, and similar is the case with any other housing finance stocks. In fact, I don't see any reason for them to correct so much. Case in point could be the Can Fin Home, because Can Fin's Homes promoter Canara Bank have put their stake for sale in the last week of March, and since then it has been correcting because that stake sale has been called off, and that was seen a quite overreaction, maybe in the form of technical long liquidation, or maybe because of the disappointment by the people, those who have gone and bought the stocks in anticipation that some strong buyer will come in, like HDFC Limited and all that. So if you take the case across the board, except for Dewan Housing, I don't think that any of the stock has really got spared in the housing finance front in this last 1 month, and all of them have taken a beating. So in fact, those things have really become quite attractive. And if you take the situation going forward, the kind of book size they have, more focus on the affordable housing, the ticket size of the loan book of all these companies are not more than 30-35 lakh per borrower. If you take on the maximum side, in fact it is as low as 15 to 18 lakhs also in case of Can Fin Home and all that. And the kind of growth which is seen visible in the housing space because of the government's focus for Home for All by 2022 is really seen a big kicker for the housing finance companies to really do well. And yes, there was little concerns on account of the rising cost of borrowing also, but I think the companies have all been quite smart in passing it on. And if you take a valuation call, having seen the corrections in all these stocks, as I said, Case in point, in Indiabulls Housing Finance, there was no reason for the stock to correct by about 15% for such a fabulous numbers which the company have posted. So you see this value buying coming in coupled with the short covering, because I don't think that short covering is the reason for the stocks to move up. Definitely some kind of value buying have been seen from the domestic funds also in this housing finance space now.
Okay, by the way, the market is surging now, so don't lose sight of that. 10,700 is here once again on the Nifty. And, you know, in the last 1 hour, if you look at just a couple of stocks that have really led it from the front, SBI has moved to the high point. So that one has sort of exerted its might. L&T ahead of its numbers also been very strong. So L&T now has moved to the high point, up about 0.5% just in the last 1 hour or so. So this is a list of, you know, gainers taking the market ahead. By the way, NTPC, 13% revenue growth and 40% profit growth is what NTPC has seen. Its generation revenue is also not bad, almost about double digit or so. That's something the street likes, because as you can see, the stock is up 2.5%. Mr. Tulsian, on L&T, how are you positioned? This time the order book is expected to be very good. The stock has had its fair run, right? It's almost at 1400 now. Is this something that you've liked for a while?
See, actually, I have always been saying that I don't think that the couple of thousand crore, you know, here and there on the order book is seen to be quite relevant for the L&T. But yes, when you take a call for the year end or maybe Q4 along with FY18, probably the order book may be relevant at this point of time. But I think that the kind of performance which the company has demonstrated even on the order front, that has really, you know, in fact surpassed on the Q3 numbers also. I don't think that there is any kind of disappointment likely to be seen. And in fact, if you see the situation going forward, in fact, the India Inc. is seen more on acquiring these stressed assets where they have been finding more value. But I think maybe in those plants or maybe in the construction space or the kind of EPC space which we have been seeing, where the L&T also has increased their big presence in the infrastructure space, that will really be seen quite positive. So maybe the performance and guidance for performance of Q4 will really be relevant for the company, which we are expecting it to be better. But the FY19 guidance overall, coupled with the order book, also will be playing a key role. But order alone may not be the only point, you know, in which one can take a decision for making investments on L&T.